Good evening everyone. Welcome to this edition on the market insights. I wanted to share something on dollar index and consequently euro dollar and effect on GBP INR and euro INR. Okay, so the first chart, I want to share three charts. The first chart is on the dollar index, a long-term dollar index chart from 2015-16 till now. Okay, now what I have overlaid on the dollar index chart is its 200-day moving average. I want to show you how such a large decline in dollar has led to such a substantial deviation from its long-term moving average. So this blue line is the 200-day moving average and the yellow line here tracks the difference between the current price and its 200-day moving average. So if you see how far it has fallen, the dollar index has fallen from the blue line to this price that is tracked here. So if you see this number, the -7 number that is coming on this chart, this is the lowest that we have seen since 2015-16, sorry 17-18. Okay, so in the last 10 years, such an extreme deviation from the long-term average in the dollar index has happened only the second time. Okay, so that gives an indication that the prices have moved to an extreme level. Very similar is what we see on euro dollar. Obviously on the reverse side, so dollar index lower means euro dollar higher. See the chart here, same blue line showing the 200-day moving average, and the difference between the spot and the 200-day moving average is captured here. And this has reached almost 1000 pips. Can you imagine? 9.5 to 10 big figures. Now again, that such an extreme is seen from 17-18. Last time it happened in 2017-18 and now it is happening again. So last 10 years such an extreme movement has happened only twice. Now typically if the dollar is lower, the dollar index is lower, all the other currencies will gain. That is what has happened in euro, what has happened in GBP and a lot of Asian currencies. So if you look at my video which I shared last week, I showed how a lot of Asian currencies has also gained in this broad-based dollar weakness scenario. But what has happened is the dollar is weak, but in INR, in India, the dollar INR, rupee has not able to gain strength despite the broad-based weakness in dollar. So what has happened? Dollar is lower, dollar index, all the other currencies have gained, but INR has not gained. INR has been static around 85.50 plus minus 30-40 paisa. So what has that led to? That has led to euro INR and GBP INR reaching multi-year peak, in fact all-time highs. We have never seen euro above 100, 101, it is 150, 101 now. Similarly, we have never seen GBP at 116, 117, it is 116, 117 now. Okay, so if you look at this chart, here we have euro INR on the left side, okay, which is left side scale, it is around 100.5, and GBP INR on the right side. Okay, so the red and green candles are GBP INR, the white and grey candles are euro INR. So if you see, GBP INR is around 116.50 and euro INR is around 100.50. Both are at all-time highs. And why? Dollar weak, euro dollar higher, GBP dollar higher, but dollar INR static. Okay, typically rupee should have gained, but it has not gained, and that as a consequence has resulted in both these currency pairs going to multi-year peaks. Now in euro INR you have a 4%, 4.5% forward premium. So if I sell now, my personal suggestion to all euro exporters is to hedge your receivables. Okay, you have all-time high spots and you get 4.5% forward premium. So you get unimaginably attractive levels. So go for that hedge. When will the market change? When will it correct? No one has any clue. Similarly for GBP INR, the spot is close to all-time highs and you get a forward premium of around 1.75 to 2% annualized. So you should also look to hedge. So my recommendation from all these charts are all euro exporters and GBP exporters should look to hedge their forward receivables, export forward receivables. Forward premiums are very high and at incredibly attractive spot prices. Okay, so that is it from now this week. For more such market insights, please follow our research community.